can position and work together to close that gap, not just for a destination for investment, but as a source of innovation capital. So we have our dynamic experts here joining us. Let's meet each of them. I'm going to have each of you introduce yourselves. Give me your name, where you're from, and then we're going to jump into our conversation, starting with you, my friend.
All right. My name is Effiong Essien, Programs Director for the Foundation for Partnership Initiatives in the Niger Delta.
Pleasure to meet you. Thank you.
Sam here.
Hi, my name is Shayo Lumide from the Africa Finance Corporation, focused on investments in the technology sector.
Excellent. Thank you, Shayo.
Hi, my name is Marlon Brown, CEO of Clarendon Global Partners. We're a venture capital firm, private equity primarily, and focused on the continent of Africa, based in Washington, D.C.
Excellent. Well, welcome so much, and thank you all for being part of this very important discussion. So let's go ahead and get started. I like to say, start with the big picture, and then we'll get into the details. We know that Africa is often described as rich in potential, but undercapitalized in innovation. So from your vantage point, and this is for anyone to help us kick this off, from your vantage point, what is the biggest barrier preventing African wealth from flowing into African innovation? Anybody can kick that off.
I think it's probably the barrier from the perspective of a philanthropist and a foundation is lack of adequate understanding of the ecosystem and also lack of understanding of the barriers of entry into that ecosystem. And we see affinity of young people interested in that ecosystem, and they lack what it takes in terms of the capital and also mentoring in terms of the resources available to support them and give them the confidence that they can fail and keep trying, and also have access to the appropriate network in how they build that confidence and succeed.
That's so good. Did you have anything to share about barriers? I can absolutely agree with you. I think education is obviously key, just understanding education. But is there any other ideas or thoughts that you have regarding barriers when it comes to innovation here on the continent?
Look, I think I agree with what my fellow panelists have said. The only other thing I would add in terms of a barrier would be regulation. There isn't a lot of consistency in regulation, and that has also prevented capital from flowing into the system.
Absolutely. If you don't have any, we'll jump right into it. Okay, so Doctor, I'm going to start with you. I'm going to start with you. All right, so your foundation's work has focused on creating impact-driven, inclusive growth models. How can blended finance and philanthropic capital help to de-risk investments in emerging industries like fintech and like digital infrastructure?
Is that to me?
That's to you.
Okay.
Yes.
Yesterday I had the opportunity of speaking about what we do and also why we do those things. So I think it's an appropriate question to explain how we do them. So basically, I mentioned that we had the opportunity and the trust of Chevron Corporation 15 years ago to be able to put down some resources and make commitments to ensuring that the biggest challenge of the Niger Delta region, youth employment, unemployment, is tackled appropriately. And also looking at how we create systemic change, and also by providing skills. So one of our targets is to ensure that we provide the skills and put down resources in skills acquisition for young people. And we also look at ways we could use philanthropic funds and resources in ensuring that we work with innovation hubs and also TVET centers in ensuring that we create access and we also upgrade the facilities to open up the space and absorb large number of young people in their local communities. So that becomes a practical sort of like a walk-in surgery for young people to get into those centers. It provides the opportunity for their peers, review and interaction, trying out building prototypes and testing them. So we also help the early starters and innovators in providing the seed funds and challenge funds to enable them experiment with their ideas, and we further support them. So we have over 14 centers in the Delta as innovation hubs that we work with to encourage that to happen. But we also did something that is bold. We understand difficulties in access to finance, so we help stimulate the establishment of a private sector SPV called Continuum Capital to help in impact investing in these kinds of tech environment. We also have what we call Sombrero Capital, another guarantee vehicle to basically bring down the cost of access to funds for young people. So we continually work within the single-digit arrangement to ensure that we bring down the cost of funds, open up access to as many people as possible that have appetite to exploit the tech understanding and space. So those measures have made it possible. But in addition, we have also seen the need to work with the public sector. We were like Honorable Minister yesterday, spoke about government involvement and leadership. To really drive the scale in this ecosystem, we need public sector leadership. So we cannot do it alone. So we use advocacy to ensure that we also drive convening power. We also intervene in helping facilitate changes in policy and even understanding of that ecosystem. So we put our resources down to open that access and allow as many people as possible who have appetite for that ecosystem to have access.
Oh, that's so good. You really just sparked something that we're actually doing back in the States. We have something similar, incubators and accelerators, where we're able to bring investors in and really surround our young people, especially people of color, with the type of resources they need, especially the capital they need to fund their startups. So thank you for sharing that. Shayo, let's go on over to you, my friend. So from your seat at the Africa Finance Corporation, how are DFIs, development financial institutions, rethinking risk models and partnerships to attract more local and institutional investors into fintech, infrastructure, and innovation across the continent?
Yeah, no, it's a good question. We're fairly new in the fintech or technology sector as a whole, and I think when we decided to start our journey here, there was a lot of excitement in the ecosystem when they heard an Africa-focused investor or DFI was going to start participating. One of the things we quickly realized was a lot of the capital currently in the tech ecosystem is foreign capital. And what we wanted to do was to try to catalyze local capital to come in. Very similar to the reason, the genesis to why AFC was set up in the first place, right? AFC was set up to plug the infrastructure gap. There was a general impatience that foreign capital wasn't doing it quickly enough. So an institution was set up, funded by Africans, led by Africans, to sort of take the lead in that initiative. So now in the tech space, I think a very similar journey is one that we're going to start to witness, where there needs to be a transition from a dominance of foreign capital to local capital, because there is the know-how with local capital and the understanding as well. So what we want to do in that space is to mitigate some of the risks and some of the lack of appetite that you're seeing in the sector. So what we're trying to do now is invest in funds. So provide local capital to local fund managers so that we can see more local funds participating within the sector.
Excellent. So Marlon, as someone leading a global investment firm, what trends are you seeing in how venture investors view Africa's fintech opportunities, and are global investors beginning to see Africa as a true viable growth engine?
Great, thank you. And I'd just like to echo
Please.
some of the comments of my fellow panelists that, and just say, I'm part of a group, Institutional Investor Network, that's visiting Ghana and Dubai and talking with investment opportunities here. And I can speak a little bit to kind of foreign capital. My colleague spoke to some of the local capital. And what we find is that there's a gap, because there's so many smart entrepreneurs here on the continent. I think there is a gap in terms of telling that story more effectively in places where there are capitals, in the U.S. or in Europe or wherever. So there are forums that would be beneficial for representatives from this group to come to the U.S. or go to other places and promote and just give a sense of the expertise that's here and bring them here. Like, we brought probably $500 million sitting in a room yesterday kind of talking about Africa, talking about Ghana, and talking about the opportunities here. So just kind of more of that, more exposure, because clearly the technical expertise and the smarts and the innovation is here. It's a matter of kind of getting the word out, and we got to think about how to bridge that gap.
Excellent. All right, well, this is for any of my panelists. As we think about how DFIs, venture capital, sovereign funds, and diaspora investors collaborate, how do we think we could collaborate more effectively to create a pan-African capital flow system? So that could be for any of you. Just put your thinking cap on. How can we collaborate better to create a pan-African sort of capital flow system?
Look, I think it's going to come down to the business environment. And, when you look at now in Africa, I think a huge majority of the companies that you see, although they operate in Africa, they make all their revenue in Africa, they're registered in Delaware, for example. And there's a good reason why they're registered offshore, and that's obviously because the investors understand the rule of law. The investors understand, the general sort of legal framework, so they want to be comfortable in investing in a company that's registered in Delaware. Now, I think in Africa, if we could figure out a way in which we can move Delaware to, some African country or city, then I think we're solving part of the problem. Now, to do that, then there needs to be a lot of work with the government. We need to figure out ways to repatriate funds easily. We need to figure out ways to get permits done, better. We need to figure out a way in which there's a stable rule of law, and that has to be done in conjunction not just with the tech companies, but also with the regulators, the central banks, and whoever the other stakeholders are. So I think generally for me, looking at it, I think if we could foster an investor-friendly environment, then it would help the capital flows. From an AFC standpoint, I think we've seen there is a gap, and we've noticed this gap. So we're trying to, I think my colleague in the previous panel had mentioned that we're trying to develop a digital-free zone, the first digital-free zone in Africa. And the objective of that is to ensure that we can have African businesses registered in Africa and in an investor-friendly climate.
That's good. Did you have anything to add, Doctor? How can we collaborate more effectively?
I think I believe in local action, and from our perspective, we believe that best practices are established, models that are successful are established. We have over 15 years established very successful models. We're not just in the technical space, but generally across various sectors that the private sector operators we engage with are phenomenally successful. So that is the power of convening and also creating successful models. You've deployed it, it's worked. So it's a matter of basically getting the national and subnational governments also becoming aware of existing of such models and best practices, And the adoption at local level helps in building, from local to the national, and then you begin to look at international. And not every African country is at the same level in understanding and development of infrastructure. We've heard that come across from the previous conversations. But when you have one or two that have the models that succeed, then you can demonstrate that it works. And as we have convened, we are learning from each other, and we're beginning to build that block of developers who can come together. And also just indicating from private perspective of what we do, creating what we call SPVs, like we've done with Continuum Capital, to basically use our philanthropic grants in catalyzing. So we're looking for capital investors to blend those and then reduce the cost of funding, provides great opportunity for those who want to explore within that space as well.
I love it. As a matter of fact, my very first business venture was funded by exactly what you just described. So thank you for sharing that. Marlon, thank you.
And if I could just add,
Yes.
there's nothing wrong with advocacy for the groups to kind of get together in advocacy groups and think about where does advocacy happen for the continent. Is at the AU conference? It's at the IMF World Bank meetings. It's at different forums that the Africa Development Bank, for example, may put on. Do we have, directed advocacy for this group there? I mean, when you're advocating for the Africa Free Trade Agreement, is there advocacy for venture capital and money management? That should be a part of it. It's a product. It's a vibrant product for the continent. Why doesn't Africa have a Pan-African stock exchange? Why am I trying to trade? Nothing against Ghana Stock Exchange, but the liquidity is not there, or South Africa by itself. But if we had a Pan-African stock exchange, then you could have opportunities for companies to go public, IPO, a lot more liquidity available. Just so more advocacy, more directed advocacy, thinking about where we do those things. Yeah.
Very good. Thank you. So this is more about the future. As we think about innovation and artificial intelligence, the blockchain and ESG, right? And environmental and social and governance. How are these influencing in your work? How are these influencing where capital is being deployed, where it's flowing? And what investors, what do we see investors prioritizing right now? So would love to just throw that out to the panel. So again, as we think about the future, AI, blockchain, ESG. Again, how are we seeing these things influence where capital is flowing? And what are investors right now prioritizing? It's for any of you.
Look, I think if you're talking to a foreign investor, then obviously, yes, they're going to be prioritizing, the buzzwords right now being AI and things like that. But if you're talking to us, an African investor based in Africa, I think our focus will be on African problems, right? So where our interest lies are companies building solutions for Africa. We're not necessarily focused on companies building, self-driving taxis in Ghana. So again, it really depends who you're talking to. That's one of the reasons why you can speak to the fact there has been a reduction in investments coming into the continent. That yes, investor sentiment has definitely changed. And it brings me back to the earlier point I mentioned where, in Africa, we're going to need to see a shift in an increasing proportion of local capital. Because at the end of the day, the local capital is going to chase and have a different viewpoint, and it's going to look for investing in Africa-centric problems.
Absolutely.
Well, I would say, the world can't exist without Africa anymore. So the buzzwords.
So true.
So the buzzwords, AI. But what when we think about AI, what makes up AI? The critical minerals that are essential for AI are primarily here on the continent. So if you think about lithium and nickel and cobalt, gold, those are things that are essential for copper, the development and the conductivity and the data centers that's required for AI. So So, you know, it's not only buzzwords, but we have to kind of look at what are the essential things that make that work. Of course, there is the IT, the programming, and all that goes along with it. But, you know, when I think about those things as an investor, I'm looking for the roots and the mechanics that make that happen, and it's right here.
It sure is. Did you want to add to that, Dr.?
Just very quickly that there are different types of investors, and the kinds of investors we see are those who have the capital and would like blended capital provisions to allow initial knowledge to be acquired of young people who have appetite. So that knowledge is the beginning and the good foundation. And we develop to buy the early risk so that concrete investors at the later stage can come in and hopefully have returns on their investments.
Very good. So we'll do a quick lightning round. I like to call it lightning round, where we're going to just jump into some quick answers, where we ask each of you a quick question around what is the one thing that we think Africa needs more of to unlock capital for innovation. So somebody mentioned, you know, we need advocacy, right? We talked about advocacy. But is there anything else you can think about that Africa needs more of as we think about unlocking capital for innovation? While you think on that, I just want to throw out there, who in the audience have heard of family offices? By show of hands. Raise your hands if you've heard of a family office. I see about 2 or 3 hands.
No, there's...
Is there more? And I'm just blinded by the lights.
In the spotlight. About 50% of the people in here.
Yes, well, I will definitely say that that's an area of focus for my firm, where we're seeing right now in the States about $5 trillion in private family office capital, and that number is set to double in the next 5 years. Over 8,000 families have over $1 billion of family wealth, and so we're finding that family wealth tends to be a lot more patient. And many times when we're looking at investor capital, for example, projects that we have in Rwanda and Kenya, it's really families coming together, collaborating and determining how they want to invest patient capital. And again, it's a bit of a newer term, because if we were to go 5-6 years ago, family offices really just weren't as popular. They really just kind of came out in the 1980s or so. And now we're starting to see an uptick of family offices here on the continent. And so I just want to really bring that up as we talk about where is the money. Tap into the local family offices here across the continent, because many of them are investing for social impact. Their next generation is looking at things very, very differently than their parents were investing, and they want to do things like invest in innovation across the continent, and really be able to be more purposeful with how they deploy their money for creating multi-generational wealth. And so I wanted to at least start plug you guys for that while we wrap up with some of that closing comment around what's the thing that we believe Africa needs more of to unlock capital for innovation.
Well, this may sound kind of cheesy, but success begets success. So, I think sometimes we don't talk about the successes that we have enough, in my view. So, if there's a transaction, if there's a exit, I'm looking to enact transactions. And so if we can do those, more of those, every single one, get them out, put them out there, market them. The perception that Africa is risky, some of that goes away when other investors see that you're actually making money and transactions are being done. So, yeah.
Did you have anything to add? Oh, go ahead.
Yeah, look, I don't mind being a broken record here. So for me, I'll reiterate, it's going to be local capital. And that local capital can be from family offices, it can be from pension funds, it can be from institutions, it can be from local DFIs. Point is, and to what he was just saying, is with an increased amount of local capital, it improves the international sentiment, right? International investors, they see more local capital coming in, their sentiment improves. And also with more local capital coming in, there's more opportunities for secondaries and exits, and the whole ecosystem generally improves.
That's good.
I think also a shift from charity into impact investing might provide that opportunity.
Absolutely. Well, what we've heard today is that Africa's future isn't just about where the money is, but it's about who's mobilizing it and how we structure it and why we invest in our own growth. So from DFIs to VCs to philanthropies to family offices, we are seeing a convergence of purpose and profit that's redefining Africa's financial destiny. So I just want to thank my exceptional panelists for being so kind to me as a moderator today, and the FinTech organizers for all that you're doing to bring such a powerful movement to Africa for capital and for Africa's future. Thank you so much.
Thank you, Jackie. Thank you so much, Jackie. We've got a photographer in the room, so please, to my panelists, please do stand up and take your photo. And I'd like to thank Marlon Brown from Clarendon Global Partners. I heard your clarion call to say, where are the African opportunities? So, Marlon, I'm hoping that you and I can chat after this, because I've got some ideas and platforms for you. Also, thank you to the rest of the panelists and to Jackie for moderating that for us so energetically, especially at this time of the day. And thank you to Shayo Olumide from AFC, and of course to Doc as well for the